What's up guys, Ben here and welcome to Motivation to Invest. During this global health crisis and subsequent lockdown of the entire planet, there are many stocks that have done extremely well. We all know about the tech giants. With everybody sitting at home, they're buying stuff on Amazon, searching on Google, browsing on Facebook and watching Netflix. So it's not surprising that these stocks have done fantastic. However, there are some stocks which you just wouldn't expect to do well. These are stocks that are usually crushed during a recession. One of these super stocks on my list has even 10x'd within the past few months. So basically, if you would have invested £10,000 or $10,000, you would have made £100,000 or $100,000 in just a couple of months. This is mind-blowing. So which super stocks are these surprising winners, and can you still jump on the bandwagon? Well, in this video we're going to find out as I reveal my top 5 surprising super stocks which are flying during this global crisis. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, go ahead and give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more stock investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and be sure to turn that notification bell on. With that being said, let's get into the video. The stocks I'm about to mention on this list are stocks that the great investor Peter Lynch would love. What I mean by that is the great Peter Lynch always said that chances are if you like the product, you may like the stock. And it's clear that people have been liking the products of these great companies. So let's kick things off at number 5, and that is SherwinWilliams. SherwinWilliams is a mammoth Fortune 500 company specialising in paint. So with everybody being stuck at home, what better time will you find to renovate your house? And that is what many people have been doing. And thus SherwinWilliams stock has been flying. SherwinWilliams has a world-class portfolio of brands. We of course know SherwinWilliams. You got Valspar, Miniwax, Purdy, Krylon, Water Seal Paint, Dutch Boy, Ronseal, which is a popular brand over in the UK. It manufactures many high quality paint brands. Right guys, so here we are on the Stockopedia platform and let's dive into SherwinWilliams. So we've got the numbers here. On Stockopedia, each stock is given a stock rank. So SherwinWilliams got a stock rank of 85, momentum 89, quality 96. It says it's not very good value at the moment, and that is because the stock has run up massively. Looking down here, we can see it's a large business, around $18 billion in revenue annually, growing at a 9.97% compound annual growth rate, which is fairly good for such a large business. We also see the net profits are increasing, pays a nice dividend of around 1%. So as you can see here, revenue is forecast to increase, net income is forecast to increase, and earnings per share. Checking out the analyst consensus, so there's people here from Deutsche Bank, JP Morgan, 13 hold, 1 sell, 10 buy, 5 strong buy. Current ratio 0.94. Generally, I'll look for a current ratio of 1.5 to 2. But for such an established business, you could make an exception on this stock. P/E ratio 28.1, that is fairly high. Coming at number 4 is Polaris, a manufacturer of ATVs and snowmobiles. A stock such as Polaris is usually crushed during a recession because people consider these type of products as discretionary spending. However, with many people stuck at home, it seems that they want a little bit of adventure back into their life. So they're hopping into an ATV, going out into the wilderness and having some fun. Of course, when you're riding an ATV, you're wearing a mask and you're in the middle of nowhere. It's the perfect social distancing adventure. And thus the stock has been flying. It went from $39 in April 2020 to over $100 today. That is greater than a 3x return on your investment. Right guys, so diving into the numbers for Polaris. You can see it's got quality of 83, momentum of 98 given the current circumstances. Value's not amazing at the moment, but it's still not as bad as some of the other stocks we're going to look at on this list. So if we go down to here, it's got a nice sort of dividend forecasted to go to around 2.1%, 2.2%. Revenues forecasted to, it says here, it was forecasted to actually decrease, but we know it's actually increasing for 2020. 2021, it's also forecast to increase. Net income, on here it says it's forecast to decrease, but we know from its quarterly earnings that it's actually been increasing, and the same with the earnings per share. So checking out the analyst consensus, 8 hold, 5 buy, 3 strong buy. So many analysts are bullish on Polaris, and it's not bad value compared to some of the others on this list. Current ratio, actually short-term assets to short-term liabilities, 0.99. Like I mentioned previously, generally I look for this to be 1.52 and above. So that's the risk you're taking there of this company. It might have slightly more short-term debt. P/E ratio 21, not too bad compared to some of the others on this list, but still fairly high at the moment. Not surprisingly when the stock has ran up so much. Current number 3 is 4 industries. Usually when the economy tanks, discretionary spending goes out the window, so people won't be buying expensive RVs and motorhomes. However, this time things are different, and that's why 4 Industries is a very surprising stock. 4 Industries is a manufacturer of high-end RVs, and their stock has been flying. It was around $35 in March 2020 and is now up over $115 per share. That is nearly a 4x return on your investment. With flights suspended or in restricted use, many people want a socially distanced vacation, and what better way to do this than in an RV? You can drive out into the wilderness, into the middle of nowhere, with just you and your family and have a great vacation. Right guys, so diving into the numbers for 4 Industries. Quality 95, momentum 99, value 50, stock rank overall of 97, which is fantastic. So compounded annual growth rate on the revenue of around 17.4%, which is fairly good for such an established business. Let's go down here. Revenues forecast to increase, net income forecast to increase, and earnings per share forecast to increase, especially into 2021. Analyst consensus, 6 hold, 2 buy, 3 strong buy. So yeah, the analysts are really bullish on this stock at the moment. Current ratio 1.65, much better short-term cash to debt compared to the other stocks we looked at. This is a pretty good stock at the moment. P/E ratio 21.2 is not too bad. Obviously it could be better if you're looking for a value stock, but this is momentum investing. You're trying to jump on the momentum of this stock at the moment, which has obviously increased massively over the past couple of months. The great outdoors thesis brings me neatly onto number 2 on my list, Camping World. Camping World is a fantastic company which supplies tents and RV equipment. They have over 130 locations across the USA and a great online presence. So it's no wonder that their stock has skyrocketed from just $3 per share during March-April 2020 to over $30 per share today. That's a 10x return. So if you would have invested £1,000 a couple months back, you would have made over £10,000 or $10,000 today. And the same is true if you would have invested £10,000 or $10,000 into this stock, you would have made over £100,000 or $100,000 today. That is a great reward in just a couple of months. Right guys, diving into the numbers for Camping World. You can see this as a momentum driven stock. Momentum figure of 96, quality 73, value 59, overall stock rank of 93, which is fantastic. Compound annual growth rate of the revenue around 13.2%. Dividend around 1% dividend, slightly less. Revenues forecast to increase. Net income forecast to increase, and earnings per share. analyst consensus, 1 sell, 8 hold, 2 strong buy. So yeah, real mixed bag on this one as far as the analysts are concerned in terms of whether it's a good buy at the moment. Current ratio 1.28, slightly better than some of the others, but still not incredible. P ratio 32, very high valuation as well. So this is a stock which is obviously increased, and it's a 10 bagger. So at the moment, the people that were in this stock a few months back, they've obviously made 10 times the money. So it's fantastic. Whether it's good to get it now, I personally feel like if it's a 10 bagger in this short period of time, it's probably run up a bit too much. But then again, it's all the risk, and that's the risk with investing. And finally, number 1 on my list, the online furniture retail store, Wayfair. This is the Amazon of home furniture and decor. So if many people stuck at home a lot more and even working from home, this was seen as a great opportunity to redecorate, get some new furniture, get a new sofa, get some new carpet, and even some new blinds. And over the lockdown period, the large stores such as IKEA and Dunelm, they were actually shut down. So companies such as Wayfair benefited even more. And their share price reflected this. It went from just $27 a share in March 2020 to over $227 per share. This is another stock which 10x'd over just a few months. Just to reiterate that for everyone, £1,000 turns into £10,000, £10,000 turns into £100,000 in just a few months if you would have invested in Wayfair a couple months ago. Right guys, so diving into the numbers for Wayfair, which is actually my favourite stock overall on this list in terms of the market it's hitting over the long term, which is basically furniture e-commerce, which is a good area to be in. Momentum 89, value 48, quality 16, stock rank of 49, but it's actually ranked the worst on this list, which is interesting as far as the numbers are concerned. So obviously we know it's a 10 bagger. It's increased 10 times the share price over the past few months. Compound annual growth rate, this is what I like. 47.2% compound annual growth rate on the revenues. And that was obviously before all the crisis was occurring. The revenues have been increasing massively. Profits, so this is one of those companies which is growing fast, spending a lot on expansion, but struggling to make a profit. So that's the major risk for this business. It must be why the stock rank is low. So got to be real careful with this business. As you can see here, revenues forecast to increase, net income's forecast to increase, well, become slightly more profitable. Still, it says it's negative there on the profits, and earnings per share also still negative. So yeah, it's still, they've not found a way to make their business model work at the moment in terms of becoming profitable. That is shipping furniture from an online store to their customers. Analysts cover the security, real mixed bag here. So 5 sell, 2 strong sell, 12 hold, 5 buy, 8 strong buy. Very interesting there. Current ratio is 0.86. It's got quite high debt. So it seems that this business, it's racked up a little bit of debt, and it's spending a lot on expansion, and it's sacrificing its profits in the short term in order to gain massive market share. Will it pay off? Well, maybe it will, maybe it won't. And that's something we'll have to find out in the long term. But for the shareholders that took the risk and jumped in a few months back, they've obviously made 10 times the money. So you'd be happy with that either way. Overall, during this pandemic, there have been many losers, but there have also been many winners. So the trick is to identify these winners, but not just identifying the obvious winners, because everybody will jump on them a lot earlier. It's identifying the winners that will be more sustainable in the long term. Like, have consumers' habits changed? Will people just prefer to shop furniture online now rather than go into the store? Will people prefer to take their tent and head out camping, then go on a packaged holiday vacation? You need to ask these questions when you're investing into these stocks. And once you have that answer, then you can judge whether these stocks have more room to run. Also, guys, I've got a very special bonus. So if you guys are interested in this platform, Stockopedia, and you'd like to check it out, you'd like to try it, then I've actually been given an exclusive 25% off voucher just for you guys who are the viewers at Motivation to Invest. So I'll leave the link below. You can click on it. You can go to Stockopedia. You can check it out. You can try the platform. Feel free to sign up. I use it all the time for analysing stocks, as you can see on this channel. It's just got all the numbers there, everything you need to find out about a stock, and it puts it in a real simple format, so you can just look at a stock quick and see whether it's a good buy or a good sell. So which of my top 5 surprising super stocks do you think has more room to run? Let me know in the comments below and I'll join in the discussion. And if you enjoyed this video, go ahead and give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.